Wealthy G Money here coming to you tonight, and we're going to be here with Tom Nash. Tom Nash is going to be talking about some Tesla. So we're going to sit back, relax, and check out this video and give Tom Nash some love also. And don't forget, you're watching my video. Give me some love too. Like and subscribe. Please. Hook me up. Like and subscribe.
Hey folks, this is Tom Nash. Welcome back to another video. If this is your first time here, don't click nothing, don't smash nothing, don't buy nothing, just listen. Now in today's video, we're talking about Ron Barron. He's one of the world's best investors. He's a billionaire early stage Tesla investor. And he was just on CNBC talking about Tesla as well as the rest of the market. And he dropped some really incredible insights about the stock market and Tesla that every single long-term investor has to hear. Now, you don't want to miss this video. It's not going to be long, and it's going to be packed with a lot of insights from Ron and myself. But as you know in my videos, I never hold you hostage. So the bottom line comes first. His bottom line was, verbatim, and I'm quoting Ron Barron here, "I can't believe how cheap stocks are right now." And that was literally what he said, no paraphrasing. So because I don't think I'm more important than Ron Barron, I'm going to roll the clip first, and then I'll share with you my analysis, my strategy, my insights. But you got to give Ron Barron his props. So he's going to go first. I'm going to go second. Let's roll the clip.
What makes people very unsettled right now, all the things that are happening so quickly. A year from now, things will look better. But stock prices, I've been saying for a little while now, I can't believe how cheap they are. These are the things that we're looking at. I'm a long-term investor. You know, it's interesting. I listened to your analyst this morning on television, and you were talking to him about Tesla.
Gene Munster.
Gene Munster. And you were asking him, great shirts he has all the time, I guess, but you were asking him about what he thought about Tesla. And he said, well, for a four-week horizon?
Yeah.
A 4-week horizon. So that was his mindset, a 4-week horizon. And then,
I think he did say for a 4-week you could see some volatility, but longer term he was a fan.
Yeah, but I mean, he was focusing on 4 weeks.
Right.
And basically, I met Elon in 2010, and it took me 4 years before I invested anything. And between 2014 and 16, invested $400 million, and we made $6-7 billion on that. In Tesla, I think we're going to make, from where it was $1.1 trillion, I was thinking we would make 4 times over the next 10 years. I think we're going to make more than that now from these prices. So I want to get one thing straight, though. First of all, that we're investors in people. For the long term, question everything, don't take anything for granted. Investing for the long term, exceptional, takes time. We look out years, own it. We own things. We don't buy and sell things. Last time I was on, the stock price was 160, and I was telling you that I thought that this was a really interesting time to buy because the the software was working way more. When they have cars, you have to have a $150,000, $200,000 car. Our car is $35,000 car. And it's software. It's software and cameras. And so it's going to drive just like a person, and probably better, way better than a person. Each new series of introductions is dramatically better than the last one. So before the model was they're making $7,000 in profit a car, $6,000 in profit a car, 1,000,008 cars. Now all of a sudden you're keeping the cars and making them robo-taxis. What that means is that if you do 50,000 miles a year for a car, those cars will generate 50,000 revenue miles, will generate $30,000 or $40,000 or $50,000 in profit per year, per car. So every time you have 1 million cars, you're adding $30 or $40 or $50 billion to $30 or $40 or $50 billion to profits per year for 1 million cars.
So Ron Barron obviously is not a new investor. He's been around the block for quite a while. He's been doing that for many, many decades, quite successfully, might I add. And he's also a very early Tesla investor, which has always been on script, never flipped, never switched, never flinched. So Ron Barron is saying that there's something going on right now in the market that's absolutely predictable. And that predictability stems from the fact that you have a lot of uncertainty. When you have, whether it be geopolitical, political, or economical uncertainty, that always translates to a turbulent, volatile stock market, because the stock market absolutely hates uncertainty. And that makes total sense. But that also has absolutely nothing to do with the fundamental quality of the stocks and businesses that are getting hammered by this market downturn. It's more macro-driven, uncertainty-driven, but it's not driven by the deterioration or the collapse of the fundamentals of the stocks that are being sold off. And that's why he's saying, I can't believe how cheap stocks are right now. And basically what he's saying is the same thing that Tom Lee was referring to just a few days ago. And Tom Lee was saying, look, folks, the stock market has flown up so high on such a huge hype over the past 2 years that the first time we had some uncertainty, some problems, the fall was very, very, very hard. You know, it's gravity. The harder they fall, you know, the bigger they are and all that stuff. And that's why it feels more violent than usual, because we've seen 2 years of nonstop hype, nonstop gains, and that's okay. Now, what I absolutely loved about this interview, he has no issues at taking little shots at analysts. And in this interview, he says, look, folks, you have analysts on the show talking about a 4-week horizon for Tesla, analyzing what's going to happen in the next 4 weeks, which is fine, but it has nothing to do with smart long-term investing. You guys have to think in decades, not in weeks. And I couldn't agree more with him. I think it's really, really smart to educate people about the importance of thinking in decades and not in weeks. And then he goes and he says, look, folks, I have made a lot of money on Tesla. I've made a lot of money on SpaceX and a bunch of other Elon ventures. I have faith in that man. And whether you think he's annoying or not, doesn't matter. We're still expecting to make 4 times on our money going forward from this point on for the next decade on Tesla. He's basically saying, look, folks, Tesla is going to do 300% over the next 10 years. That's on average like a 30% performance annually, which is 3 times higher than the S&P 500. And if you think that's not a lot, well, you obviously started investing in 2023 or 2024. You don't know what the real market returns look like. If you give me 30% for the next 10 years, I'm going to take it right now, without even questioning, without saying a word. 30% per year for the next 10 years, that's amazing. Now, he also talks about the fact that Tesla still has a lot of proving to do. He got a little bit of pushback from the panel saying, well, you know, Ron, how do you see Tesla get over this hump? Because, you know, Elon Musk antics and politics and all that stuff. And I said, look, folks, Elon Musk is clearly the world's, you know, one of the best CEOs in the world. He's definitely a top 3 CEO, if not better. And he basically says, look, folks, I'm in the business of buying and holding stocks. I'm not trading. And I invest in people. To me, Elon Musk is a top 3 CEO. I have seen him execute on SpaceX, on Tesla, on Neuralink, on Starlink. I know he's capable of delivering phenomenal results for his investors. And I'm not going to change that because he made me a lot of money, and I believe that to be the case going forward. And he says, look, folks, I'm not an active trader. I've never traded the stock. All I do is buy and hold good companies, the same way Warren Buffett does, the same way Charlie Munger did. All the greats, they're not actively trading. And that's not a coincidence, because that's how you make money. I mean, Charlie Munger literally told you this. He said, look, folks, you make money in the stock market not by buying or selling. You make money by waiting. Warren Buffett also had a similar quote, you know, our favorite holding period is forever. And you can make fun of them all you want, but the case is still true. They all made generational money by being long-term investors, not by being active traders. And it says, look, folks, you think that Tesla is just a car company? Sure, don't invest. That's fine. I don't have to have you invest in the company for me to believe in it. Exactly what I keep saying. Trust in your thesis, not in what some other people are saying about the stock. You don't care what strangers think about you. You shouldn't care what strangers think about the stock you invested in. And it says, look, folks, look at 2020, look at 2025. How far did Tesla come in that time frame? And I'll show you in a second how far, because this is pretty spectacular. If you look at the numbers, they're pretty insane. If you just held the stock and did nothing except holding the stock for the past 5 years, you've returned 565%. With all the turbulence, all the volatility, all of this. So Ron Barron isn't wrong. But to me, I understand the difficulty for a retail investor. He's a billionaire. He's been at it for many, many decades. It's easy for him. I understand that if you recently start investing, if you're a little bit more inexperienced, it's not an easy thing to sit here and look at Tesla being down 36% since January 1st. It's not easy to look at Tesla going back all the way down to October 2024 prices. The market right now is on extreme fear, on the fear and greed index, and you have S&P 500 down 5%, the NASDAQ is down 10%. It's very, very hard. And then you look at Elon, make it even worse by going into politics and annoying 50% of his customers by being political. And you're basically looking at Tesla, well, peak to trough, you know, from the highest point to the lowest point, it's down 50%. Obviously, that leads to a lot of fear, uncertainty, panic, doubt, from new investors, from existing investors. I totally understand, but you're going to feel much better after today's video because you're going to have all the information. Not because I'm going to convince you to buy or sell. That's not what I do. But I will teach you how to think for yourself, and I'll give you the proper information to analyze this process rationally, logically, so we can screen out all this media hysteria out and just stay with the facts. Now, in my community, I've been doing this over the past 5 years, and the results speak for themselves. We have members that have done 400%, 500%, 600%. Just the member that posted a few days ago on our Discord saying he did 178% returns by just dollar cost averaging through the bad times, through the good times, and staying disciplined. 178%, not that bad for somebody who just started investing. Now, what you have to understand that as a long-term investor, you have to, first of all, be able to stomach volatility. I said in my previous video that the volatility aspect of investing is very important because most investors completely confuse that with risk. When they see a stock that's very volatile, like a Palantir, like a Tesla, they assume that they're watching risk. Risk would be losing government contracts for Palantir, or losing a factory in China for Tesla, or Elon Musk leaving for Tesla. That's risk. Volatility is absolutely irrelevant. You have to be able to stomach, ignore it, and leave it alone. That's the hardest part of investing for newer long-term investor. And the super wealthy investors that I just mentioned in this video earlier, they don't trade. They just buy and hold. Buffett, Barron, Munger, all of them, you can go down the list. They have a multi-year view, and that multi-year view doesn't get phased by daily and weekly price fluctuations. That's the one thing you have to master before anything else. Now, they also see these price drops as opportunities, not as problems. And that's the other thing. There's the famous Warren Buffett quote, "When everybody's fearful, I'm greedy." That's not a joke. He didn't just say that. He lives by the mantra. Buffett has been in cash for the better part of a year. Why? Because everybody else were absolutely hyped up. FOMO, love the market. When everybody's greedy, he's fearful. When everybody's fearful, he's greedy. And right now, we're at extreme fear on the fear and greed index. And if you look at the past 5 years, look at what Tesla did to traders. From 300 to 196 in May of 2021. From 404 to 216 in June of 2022. From 300 to 122 in January of 2023. From 436 to 242 right now, year to date. A lot of portfolios were destroyed by Tesla over the past 5 years. Clearly, a lot of people got punished. But if you just bought and hold Tesla for the past 5 years, you're up 565%. Tesla has always done the same thing, and people refuse to see it. It has always punished the short-term traders and has always rewarded the long-term investors. That has never changed, and people refuse to accept that. Now, looking at Tesla right now, 36% cheaper than it was just on January 1st, I'm asking myself one simple question. Is he no longer a top 3 CEO in the world because he's now political? You can separate the fact that he's political and his antics from the fact that he didn't lose the ability to be a world-class executor. Now, if you've never believed in him, if you've never believed in Tesla and you think he's a horrible CEO, not talking to you, that's fair, just buy something else. But if you thought that Tesla was a good company and he was a great executor and a top 3 CEO in the world, did that change overnight because he became political and now he's annoying you? I don't think so. Did Tesla lose its lead in full self-driving, in energy business, in robotaxis and humanoid robotics? I don't think so, right? Over the past 5 years, Tesla has gone from $31 billion in revenue to almost $100 billion in revenue. 3 times more revenues now than 5 years ago. Net income went from 700 to 7 billion. They went from 20 billion cash to almost 40 billion cash while building 2 factories in China and in Germany. And even though you have some stagnation in automotive sales, I get it, but look at Tesla's actual S-curves coming up on the next few years. Full self-driving autonomy, that thing is about 95% ready, and Tesla's about to monopolize the world. And you can talk to me all you want about Waymo and some other competitors, but this thing doesn't require LiDAR, no capex, just a few cameras and the software. Tesla is about to make 80% gross margin on the software and to become the world's premier autonomous driving provider for all OEMs. Nobody's catching Tesla. They have the most amount of miles, and they are actually moving faster than anybody else. The lead is growing by the day. Nobody's catching Tesla on the autonomous side. And once Tesla unlocks that, the incentive to develop another one basically goes out the window, because at that point, why spend billions of dollars and years of development on the chance that you might develop something that you can literally just license from Tesla at a few dollars? Also, energy business is growing at 100% per year, which is insane. Nobody's talking about the energy business. Essentially, Tesla just became the gold standard in energy storage. That thing is absolutely under the radar. And we haven't even said a word about humanoid robotics, the next global S-curve after AI, in which Tesla is already making huge strides. All of this is absolutely not priced in right now into the stock. And all of this is being trampled and absolutely destroyed by market sentiment that comes from macro. I've told you in my previous video, when you have macroeconomics and uncertainties driving the whole market down, that's your opportunity to pick up the stocks that are fundamentally great, but they're getting dragged down, they're getting wet because everybody sneezes. That's the whole point here. When a stock drops, not because it's fundamentally flawed, not because its thesis went down the drain. When the company is doing better than ever, if you can literally understand what Tesla is doing, and if you can't look at Tesla at more than just a car company, that's fine, it's not for you. But if you understand that Tesla's future is FSD, autonomous, robotics, energy, AI, if that's the case, Tesla has never been better, and yet it's 36% cheaper. The only place where people complain about discounts is just the stock market, and that's what Ron Barron has been saying in the beginning of the video. He can't believe how cheap these stocks are. That is why I want to get people off that hamster wheel, of that roller coaster. Now, of course, you may be a gambler and you love the process. Go right ahead, create a way. But if you don't like emotional roller coasters and you want to get better at long-term investing, so you don't have to have the FOMO, the panic, the anxiety, you don't want to time the market, you don't want to be glued to a computer screen trying to figure out what to do next, you just want to get rich slow over the next 10, 15, 20 years, I'll teach you how to become a better long-term investor, not a trader. I'm not going to give you stock picks. I'm not going to give you buy alerts. I'll teach you how to do this for yourself, how to become a long-term investor. Join the Academy, patreon.com/Tom Nash. Would love to see you there. I'll see you next one. Peace.
Okay, YouTube, that was Tom Nash speaking about Tesla. That's his thoughts. That's him analyzing it, and I agree with him 100%. Tom Nash, like, subscribe. Not Tom Nash. Well, Tom Nash too. But I was talking about me. Yeah. Like and subscribe.